Welcome back. You're with us on Halftime Report. Now let's take a look at the other big story that's playing out through the course of the day. We have, of course, picked up from sources the contours of the new income tax bill. Now, this bill is expected to be tabled in the Parliament tomorrow, and it has already been made available on the Lok Sabha website. So now it's actually come into the public domain, and the bill is available for wider public discourse as well. It's there on the Lok Sabha website. Let's straight away actually go across to our experts to try and understand some of the salient features of the new income tax bill. Remember, this is a bill that's going to replace the Income Tax Act of 1961. It has been a much-awaited review, aiming and hoping for some simplification, more clarity, and perhaps a more concise act in itself. We have with us Mr. Dinesh Kanabar joining in from Dhruva Advisors. And we also have Mr. Mukesh Butani from BMR Legal. I think, yeah, we've got Mr. Butani as well. Thank you, gentlemen, both of you, for joining in. So I know it's an exhaustive bill. I don't know how much of time you've had to go through all the provisions, but let's start by understanding some of the broad thoughts. Mr. Kanabar, if you could open, does it address the main purpose of making the act more relevant and simple?
What the new bill has tried to do really is to keep the contours of the existing act as it is. It hasn't made many changes. So, for example, the scope of income remains the same. The heads of tax remain the same. The salaries, house, property, capital gains, everything is same. The taxpayers remain the same. So we have the same concept of individuals, HUF, LLP, etc. And the reason I mention this is that, as it always happens before something gets introduced, there is a wide range of speculation as to what could the changes be. And many of these things were expected to change. But the bill has preserved all of them. What it has done is that, so for example, you had Section 10, and then within Section 10, you had Section 10, 1, 2, whatever, 50 odd subsections. They have all been put into a schedule. Similarly, you had deductions under Chapter 6A, which was ATC, ATD, DD, DDA, JJ, all of those. So they have been sort of serially numbered. And therefore, what has happened is that the number of sections has gone up from 298 to 536. The bill reads simple because all the provisions of a like nature have been put together. As the finance minister has assured, the provisos, the explanations have all been put out, and instead they have all been incorporated into sections. So not too many substantive changes, some changes which we can talk about as we go along. But overall, the bill continues to be what the Act earlier was, with no really material changes. It reads simple, it reads comprehensive. The only disappointment, if I may say so, which I do have, is that there was a big expectation that the bill will also bring about some material changes, A, to the dispute resolution provisions, and B, to some of the compliance provisions. That has not happened. Perhaps as we go along, that's a 2-3 year exercise where the law will be amended to make it more taxpayer friendly. So this is really more a drafting exercise than a substantive exercise, if I may say so.
Okay, all right. So it keeps the basic framework and the ethos of the original Income Tax Act of 1961 intact. And I heard Mr. Kanabar talk about the slight disappointment because dispute resolution has been a big demand from the tax fraternity, and perhaps some of those provisions immediately are missing, but maybe that's something that the department will work on separately. Mr. Butani, your thoughts, sir? What do you make of it? Headline stuff. What's the headline in this new Income Tax Bill 2025?
Well, it's a welcome cleanup exercise. There are some interesting and reformative measures as well in the new bill. For example, there is now taxation of trusts or separate class of taxpayers called not-for-profit, which I think is welcome. And they have divided this in all forms of taxpayers, educational institutions controlled by the government, educational institutions not controlled by the government, public trust, so on and so forth. So there was a fair bit of disputes surrounding that area. So hopefully with the cleanup exercise that will get addressed. Second is also the concept of business trust that was defined, which encompassed a host of class of taxpayers like venture capital firms, specified investment funds, securitization trusts. They have all been segregated. So all in all, a good exercise for taxpayers who need to look at the relevant parts. some of the misses that were not there in the definitional parts, like, for example, the term crypto assets was not defined. They've gone ahead and defined that. The law has been made a little bit restrictive in many ways. There have been some disappointments as well. I expected that the new code was a good opportunity to bring about some very reformative changes. Dinesh mentioned about a dispute resolution. There were many changes that were anticipated with respect to cleanup of many provisions which were resulting in disputes. So none of them has been carried out, but one can hope and anticipate that that would be part two, or at least based on public consultation and consultation with experts, the government will listen to various stakeholders and carry out those changes.
Yeah, Mr. Butani, just want to try and come to some of these provisions one by one. You mentioned taxation of trusts, also business trusts and not-for-profit organizations. Now they're being treated as a separate tax entity. Does this in any way or form change the tax liability on these structures, or is it just providing more clarity?
No, it's just providing more clarity. Fundamentally, there is no change. So, for example, business trusts have all been classified as pass-through entities, which means the entities don't pay tax, the shareholders or the unit holders pay tax. Similarly, with regard to other forms of not-for-profit public trusts and other trusts have been kept outside the tax review, but they were scattered across many chapters or many sections of the extant code that we have. Now in the new code, they have all been clubbed together.
Okay, all right, got it. Let's take up the point on crypto, virtual digital assets. I don't think there's any change in the taxation, right, Mr. Kanabar? Crypto assets will continue to be taxed at 30%, right?
That's right. So there is no change at all on the substantive tax or the capital gains tax, either of the two. It is simply that virtual digital assets have now been defined as a separate class of asset. So in substance, it changes nothing except to sort of make things beyond a shadow of doubt. So really it continues as it is. The changes that we have seen are some of the changes. So for example, there is change relating to associated enterprises. So today, under the Income Tax Act, if a payment is made to an associated enterprise, and I'm using that word generally, then the tax officer has a right to see whether the payment is excessive and unreasonable. And if it is so, then the excess or unreasonable part can be disallowed. Now, there has always been this view, including right up to the Supreme Court, to say that the officer cannot really question whether an expenditure had to be incurred, legitimacy, etc. Now, what the law has been amended is to specifically provide that an assessing officer can go into the legitimacy and therefore deductibility and whether that expenditure was at all required to be got into. So in some sense, the officer will step into the shoes of a taxpayer and sort of question the expenditure. That is sort of one part where an expenditure.
Mr. Kanabar, correct me if I'm wrong. This was, you're saying that as of now, there was complete clarity at the Supreme Court level as well, that, the tax officer cannot get into some of these nuances about the legitimacy of whether this expenditure should have been incurred, not incurred. But now this bill is opening this up. So in effect, does it not perhaps open up the scope for further litigation, because the tax officer can come in and ask whether this was legitimate, non-legitimate, how much was the benefit incurred on this expenditure, etc. So isn't it actually, couldn't it perhaps lead to more litigation on this one aspect?
So on this, there has been really a flip-flop, Survi. So earlier, there was a domestic transfer pricing, which was there for a few years. Then the domestic transfer pricing went away, and transfer pricing provisions currently apply only to international transactions. Now, while domestic transfer pricing has not been reintroduced, but if one had to really substantiate the expenditure, then probably one might have to talk about domestic transfer pricing, and the officer can really go into a question as to whether the expenditure should have been incurred at all or not. So yes, any new use of words can lead to its own interpretation, and therefore probably a controversy around it.
Okay, all right. Mr. Butani, if I could come to you, slight paucity of time. But I think the other details are well known, that the tax year will replace the assessment year. So instead of AY, we'll now call it the tax year, and the previous year will continue to be the financial year. On TDS, I mean, while some statements have been made by the finance minister in the budget as well, but did you notice anything in specific in terms of a new TDS framework, instead of multiple rates, bring it down to 4-5 rates? Is there anything on that you perhaps picked up?
No, there is no change in the TDS rates. Whatever relaxation was given, proposed in the finance bill of 2025, they remain at that level. In fact, if you look at the code, it's very clearly evident that the drafting exercise started predicated on using the Finance Act 2024. So many of the changes that were introduced, the simplification changes with regard to TDS in the bill of 2025, do not find any mention in the code as well. So the bottom line is no change in tax rates, no change in deemed profit provision, actually no changes at all on the charge of income tax with respect to any class of taxpayers.
Which is fine, but it doesn't meet, okay, final 10 seconds, does it meet the original objective, which is, simplification and perhaps eventually leading to lesser litigation as well? Does it meet all your expectations, Mr. Butani? 10 seconds.
Well, if I was supposed to write it down, I would write it down differently. Let's put it this way. As I'd mentioned, there is an opportunity to reform it, to make it more modern. I think that the elements of modernity and reformative in the first brush look is missing in my view.
All right. Again, 10 seconds. Final word, Mr. Kanabar.
Just very quickly, Surbi, if I may say, so one change which I have just noticed is that there was a controversy with regard to the gift city as to whether the income which is exempt in the gift city should only be for dealings with other gift city unit, or they can deal with anybody else. That has been clarified. In my interaction with the officials from Niti Aayog, what I had understood, Surbi, is that this is a 3-year process and it is not going to happen in one shot. So what it has done just now is merely sort of to tabulate and make it more wieldy rather than unwieldy as it was, remove all the old provisions, and the changes will come now over a period of time. So lot more to be done, yes.
Okay, lots more to be done, but perhaps a step in the right direction. That's the view from our two experts here. Thank you both so much for joining in and giving us a first-cut analysis of what this bill is bringing about, the new income tax bill of 2025 to replace the Income Tax Act of 1961. Well, on that note, we have to take a very quick break, come back with a lot more on the other side.